There are two opposing forces in the crypto space right now that are coming to a massive clash. Half the people think the Clarity Act is going to get passed, and the other half say it's still going to fail. We just got a brand new interview with Patrick Witt, the crypto advisor for the White House, and he kind of gives the game away, saying that banks actually need clarity more than the crypto industry does. Let's go through what he's saying here because he gives some of the game plan away. We're also going to look at what could still stall the bill, hear from industry insiders, and check in with the senators who actually have a stake in making this legislation happen. Before we dive in, make sure you support the channel, like, share, and comment. Let's have some fun. Patrick stated he is very bullish on this legislation. He pointed out that many people out there would say that the banks are actually probably more in need of this legislation than crypto is. Bank permissible activities and Title IV are hugely important to the banks because, in a world in which you start to tokenize a lot of these assets, if banks don't have clear permission to engage, they're going to be left behind. Competitively, it's arguably as important, maybe even more important, that the banks get this legislation done. He questioned whether the groups fighting over stablecoin rewards and yields just want to fight the bill overall, using it as a wedge issue, but reiterated that he remains very bullish. I think it's interesting that some banks are out here saying crypto could ruin us. Let's be real, those are the mid-level credit unions, the smaller community banks. The big guys, the JP Morgans, the Citibanks, the HSBCs of the world, they have already been in crypto for years. They have their infrastructure ready to go. They have their partners, their proof of concepts, and their tests. You give them clear rules of the road and proper regulation. They are going to kick this thing into high gear. And that's what's going to get really exciting. Which blockchains are they going to choose? Solana, XRP, Ethereum? We really want to know, because volumes are going to pick up considerably once this is the law of the land. But institutions won't fully commit to crypto until regulation is stable enough that a new administration can't just reverse course. Let's be honest, the SEC and the CFTC have given clear guidance to the crypto industry, but that guidance can be reversed. Look at how Paul Atkins of the SEC and Michael Selick of the CFTC came in and undid all the crazy batshit stuff the last administration did to try and kill US crypto. That hostile environment is exactly why projects and developers went overseas, giving us the FTX and Terra Lunas of the world. We desperately need a regulated market, and the only way to do that is to lead by example here in the United States. Let's roll the next clip. Industry leaders are echoing this, noting that if you're a large institution, you're not going to set up a line of business, open a new division, or invest the necessary money if, in a few years, it could potentially get reversed and you have to shutter the whole thing. Sophie is a great example. They got into crypto early, the administration came in, they had to shut it down, and now they're turning it back on. That kind of whipsaw reversal is just not how institutions operate. If we want banks and market participants to engage, they need a clear marker that says, definitively, yes, banks can engage, and it's not subject to change with a new administration. Ooh, that was an insane beat in the background of that clip, right? It was so hard to pay attention to what was being said over that deep bass 80s theme track. Oh man. Anyway, let's get back to it. Institutions need to understand the clear rules of the road. If they set up infrastructure, customers start using crypto, and the next administration comes in and renders it illegal, that's a massive problem. You can't just go back and say every transaction you processed was suddenly illegal. You're talking about the mother of all fines, jail time, or losing a banking license. That's why they won't fully touch it yet. But they will soon. All right, I'm trying to stay focused, man. That caramel frappuccino is hitting me hard. I splurge on Sundays, and maybe I shouldn't have recorded right after chugging it. But hey, let's keep moving. The Clarity Act is about to change everything. The floodgates are opening. When asked about his vision for the industry 1 to 5 years down the road, assuming this passes, Patrick Witt told us to look to the Genius Act as an illustrative example. Genius passes, and the stablecoin market explodes. You see tremendous investment, funds like Han Ventures, A16Z, Dragonfly, Paradigm raising massive capital, specifically around stablecoins and new payment rails. That is proof of cause and effect. With regulatory clarity and rules being written, here comes all this venture money. Institutions start asking how they can integrate this into their suite of products. You're going to see a similar response with the Clarity Act. That government stamp of approval proves this industry is here to stay, leading to massive institutional adoption. I mean, everybody watching this channel is smarter than the rest of the planet, right? You figured out early that a new financial system is coming and it's going to run on the blockchain. You are front-running a technology that is going to change how 8 billion people move value around the globe. Trillions, quadrillions of dollars are coming on-chain. Put yourself in the shoes of a bank CEO. How do you stay ahead of the competition? Technology, AI, and blockchain are the two super trends dominating the world right now. It's a digital arms race. And if you don't have your own infrastructure ready, what do? You pick up the phone and call a company like Ripple that has infrastructure already built out and scaling. You have to leapfrog to catch up. Get ready for an insane amount of partnership announcements and pilot programs going live. It is going to get spicy. Some are saying they don't even think of this as a crypto bill anymore. They think of it as a market modernization bill. This is the legislation that is going to bring our financial markets into the 21st century. Congress is finally beginning to understand and think of crypto as actual infrastructure. They're finally seeing it for what it's always been, infrastructure. But hold your horses because there's still a Mount Everest we have to climb. The Clarity Act could still fail. Here are the 7 hurdles standing in the way. First, the Senate bill merger. The Banking Committee text must merge with a parallel bill passed by the Senate Ag Committee back in January. Any compromise text will likely face new opposition to create a superbill. Plus, Congress loves to slide in unrelated crazy stuff into these bills, which stalls votes. Second is the 60-vote wall. Once reconciled, it needs 60 votes on the Senate floor to overcome a filibuster. Republicans only hold 53 seats, meaning at least 7 Democrats need to cross the aisle. We know there's appetite. 16 or 17 Democrats voted for the Genius Act, but it'll be tight. Third is the ethics fight. Democrats are demanding a conflict of interest provision banning officials from promoting crypto or launching projects while on the taxpayer dime. The White House opposes this. If this isn't resolved, the 60-vote math collapses. Fourth, the banking lobby. Banks are still pushing hard to kill the DeFi safe harbor, tighten stablecoin yield rules, and strip developer protections. Expect to see associations calling senators to urge a no vote. Fifth is House reconciliation. The House passed its own version in July 2025. The Senate added 33,000 words covering DeFi, insider trading, and bankruptcy. The House has to agree to these massive changes. Sixth, the August deadline. The floor vote must happen by August. Miss it, and midterm campaigns take over, pushing the next window to 2030. It's an American political circus. And seventh is the rulemaking delay. Even if signed, the law has a 360-day delay while the SEC and CFTC write the actual rules. Remember the Dodd-Frank Act? That took over 3 years to implement. Compliance deadlines might not land until 2027 or 2028. But if we pull this off, crypto holders win big. We're talking clear graduation for tokens to commodities. No new federal restrictions on self-hosted wallets. DeFi safe harbors protecting code publishers from overreach. Real investor protections against pump and dumps, and upgraded custody rules protecting your assets in bankruptcy. The bill is headed for a full Senate vote, with the White House targeting a July 4th signing. As discussed on the Wolf of Wall Street's podcast, it is difficult to get a major piece of financial legislation done when you're not doing it in response to a financial crisis. That's why this is abnormal, but it really should be the norm. One of the things that underwrites American success is our deep, liquid, predictable capital markets. President Trump is a competitive guy. We want to be number one and dominate in crypto. The American Bankers Association is still pushing back, claiming stablecoins will drain bank deposits and threaten local lending. The fight isn't over, it's just getting started. But U.S. Representative Brian Steele is still incredibly bullish. He recently said they're getting a second bite at the apple with the Clarity Act, noting there's a lot of discussion assessing exactly what yield or rewards are as they relate to stablecoins. When asked if he thinks it will pass the Senate, he said he's bullish it will, aiming for the end of July as consensus comes together. Alright, there you have it, guys. One last very helpful thing before we go. Digesting 309 pages of technical legislation is rough. To help you dig in, there is an amazing interactive map breaking down Title I. I'm leaving the link to it right down in the description. If you are the type of person who needs to read and understand every single piece of this, please click through and check it out. Just remember, things can still be added or taken away before that final Senate vote. Let me know what you guys think about all this down in the comments. Some of you are hilarious, and some of you have an incredibly sharp eye for what's coming next. Thank you so much for supporting the channel. It is an absolute honor to spend this time with you. Have a fantastic week ahead, and I will continue to bring you the most crypto updates of any YouTuber in the world. 4 videos a day, 7 days a week. Aloha!